Hi, and welcome to the Stock Scores Market Minutes for March 18th, 2019. I'm on vacation this week, so I don't have my cameras and things set up. I'm just sitting on the patio here overlooking the ocean in Mexico, and I thought I would quickly do this week's video. So let's start off with our topic of the week, which is to wait for the trade. Trading is not like most jobs. You don't get paid by the hour. You don't get paid for the time you're sitting there. You get paid for the trades that you take. And the reality is that good trades will come in spurts. You could have a few days where it's very slow. If you're a longer term trader, you could have many weeks that are slow. And then all of a sudden you'll get 4 or 5 in a row. It's important to not force trades during those slow times. That's why we need to define our requirements, actually write them down, have a checklist, and wait for the trades that meet those requirements. Because when the markets are slow, it's very easy to force it to try to find trades. And if you have to try too hard to find trades, they probably aren't good ones and worth taking. You make more money by trading less in those slow periods. All right, let's get into this week's market analysis, starting us off with the US markets. Here is a chart of the S&P 500 on the 30-day 60-minute interval. And you can see that we've made a nice comeback up to resistance, and we were knocking on resistance's door this week again, and really didn't break out. We went a little bit above it, but then fell back, a little bit above it, and then fell back. And what that shows is that the market just doesn't yet have the commitment to send stocks up to the all-time highs, which we had late last year. And so I think it still is a matter of the buyers are in control, but you want to be a little bit cautious because the market is not helping just yet. Onto the longer term time frame, and there you can see the long-term resistance that I think we will ultimately get to as long as something doesn't go wrong with China-US trade talks. And we're, just kind of stuck under this resistance right here. Feels like it could break through in anticipation of a trade deal, but there's people who know what's going on in those talks and who will have a lot of money to move around, and those are the ones who will predict when the news will be coming out. And really what we do is just follow market action, follow the big money, because they usually have better information than the rest of us. On to the Russell 2000, which is the small cap market, and it had a little bit of a break of an upward trend a couple weeks ago, and we came back this week to stabilize. I think we probably will just go sideways in an ascending triangle pattern, so look for maybe getting up to that resistance level next week. If we actually roll over and break down through those lows, then I want you to be pretty cautious. But for now, it's still a optimistic chart and not of too much concern. On to the Canadian markets. TSX 60 had a pretty good week this week. It actually got through those highs. You can see breakout, but ultimately fail, and then tried again. A little bit of a selling pressure near the end of the week. What's encouraging, though, is that we do have rising bottoms, and so optimism is coming back after a lengthy period of sideways trading. And so it feels like this market wants to go higher, but it's still going to fight with the longer term resistance, which you can see here on the longer term chart. There you have that longer term resistance. I think we're headed for that price zone, right up in there. But once we get there, we're going to get stuck unless there's something really big that drives commodity prices higher, which of course the Canadian market is heavily dependent upon. TSX Venture, nice chart here. We've had that long-term downward trend line was broken. We've been building optimism. We just need to make a solid breakthrough resistance, and it sort of tickled through on Friday, but I don't think it's a strong move. But it is, we are seeing that strength coming into the cannabis sector again, and I suspect that that may be the area that motivates this market higher. And so as long as the rising bottoms are intact, I think you can be optimistic about the TSX Venture stocks. On to currencies, of course, the US dollar has been bouncing around a fair bit, and this week it gave back some of the gains from last week as the market hits resistance, and we have optimism here on the chart. And so if we can break through that $26 resistance zone on the UUP, that should indicate that the US dollar wants to start moving back to those highs, but I suspect it'll take a few weeks before that happens. On to the Canadian dollar, and of course we talked about the attempt at breaking the downward trend a few weeks ago, and then we've fallen off, and we haven't given up yet because we haven't gone to new lows yet, but unless we can break that downward trend line, I wouldn't get too optimistic. Interest rates, the old TLT chart, which of course if this is going up, interest rates are going down. It was basically unchanged last week, not a lot of movement. But we are building a head and shoulders bottom pattern, and if we can break through resistance, to the upside, that would be a bullish signal for the bond market, which means interest rates go down. Until we get the breakout, I wouldn't get too optimistic about it. And commodities, let's take a look at gold first. So gold had that big sell-off week 2 weeks ago, but that didn't really break the upward trend line. We're sort of holding that there. Could probably even draw this more like that. And so we're holding that nicely, but I worry that if we make a falling top and then break down through that upward trend line, we will need to be somewhat concerned for gold prices. For now, cautiously optimistic, but they are at a critical point where they need to hold that trend line, as they have done for the last 2 weeks. Oil chart, little local highs here this week. You can see that we moved up through that sort of 3 weeks of resistance, and we are in this upward trend. But in the context of the longer term chart, you know, are we really breaking out? Perhaps we are. You know, we had this price point that we hit a number of times. We stalled there. So perhaps we're going to go higher. I don't think there's a lot of volume yet. You can see that volume isn't really accelerating. But if we do start to get some accelerated volume, then perhaps some life is coming back to the oil market. And finally, the fear chart, VXXB, back to the lows. Fear is not a factor right now. We had a little blip higher a few weeks ago, but right now it's not a big deal. Perhaps market is complacent, but the market just seems to be waiting for something to happen on US-China trade. Buyers don't want to act, sellers don't want to act, but individual stocks can do well. So my ratings then, neutral and bullish, neutral long-term, bullish short-term for both the US and Canadian market, neutral both time frames for gold, neutral long-term for oil, bullish short-term. Stocks are seeing a broadening of strength outside of the large caps and that have been leading the market. So although the overall market index doesn't seem to be doing a lot, there is lots of stocks that are doing good things. And so there continues to be buying opportunities even as the stock market stalls at resistance. Gold strength is stalling while oil is drifting higher, not moving higher with a lot of enthusiasm, and fear is low. All right, let's do our stocks to watch. We'll jump over to the stockscores.com website and run a couple of market scans here. Let's start off with the abnormal breaks US. And we're going to run it on everything, but we'll only look at the stocks up to a certain price range because I don't want to go through 40 charts and bore you guys to death. So let's take a look at some of these charts, and I'll stop when I see something that's good. So the market scan tool is something that's available to investor and active trader members of StockScores, and it allows you to filter through the entire market very quickly using a variety of different filters and preset scans. So I've run a preset scan called Abnormal Breaks, and here's a good looking chart with strong volume, price break out of this sideways trading pattern. I would give this one a 7 out of 10. Moving along, here's a stock that really started its move. This is actually a warrant. Started its move a couple of days ago. We want to find those fresh breaks from low volatility where there's some abnormal activity from a low volatility price pattern. This stock does look pretty good, but it's going to run into a fair bit of resistance over here. Sorry, I'm trying to, oh, my drawing tool isn't working. Anyway, I'll keep cycling through. That one I would give a 6 out of 10. It's going to run into some resistance at $3 on LPTX. Keep on moving here. And this on Canova, nice break from a rising bottom. You can see the strong volume increase. Not really strong volume, but pretty good. I like this. I think it's probably a 7 out of 10 as well. Resistance not until the $6 to $7 range, so it's not huge upside, but that's pretty decent. ONTX, give that a 7 out of 10. And we'll go through a couple more pages here. I don't know if you can hear the tropical birds chirping in the background while I talk, but so this WSC is also breaking from a sideways range, a little choppy, volume not that strong. I would give this a 6 out of 10. This will be our last page, and then we'll do the Canadian market. So this chart, CATS, is the symbol. You can see the abnormal price action, abnormal volume. The price pattern is a little choppy, but if we make this a longer term chart, it might look a little better. Yeah, it's not great. Still pretty choppy. It is going to new highs. I think that this stock more likely to go higher than lower in the months ahead, but probably pulls back first. I think it probably pulls back to at least 12 before it tries to go higher. So I'd give that a 6 out of 10. All right, let's jump over to the Canadian side. We'll run the same market scan. So we'll go market scan, run it for the Abnormal Breaks Canada. I like to run this scan every day. It produces a lot of really good swing and position trades. So here we have V.SIM, which is breaking from an ascending triangle. You can see volume is strong was a little bit off of the highs at the close. I'm going to take a look at the intraday time frame. There was a little bit of selling pressure into the end of the day. Not a big deal. I think I would give this, let's take a look at the 3-year. So on the 3-year, you see a bit of a problem because there's going to be some resistance at 70 cents. You can see that that was the old high. So that limits your upside to a little less than 2 to 1. So I'd give this a 6 out of 10, not better than that. This stock here, PNG on the venture, started its move some time ago, so it's a good hold, but I wouldn't buy it. Continental Gold started its move 3 or 4 days ago, not good now, it's a good hold again. WSP not really through resistance. All right, so that's the kind of analysis that I can teach you to do in one of the courses that I offer through the Stock Scores website. You can go into trader training here on the website and look more into that. Let's take a look at the trade of the week. This is a stock I bought on, what day was this now? I think it was Tuesday or Wednesday. It was the 13th, whatever that was. So that was Tuesday, I believe. Anyway, it gave the action candle right where I'm circling there. You can see the pink dot. So that was our entry point. And we run a process in TradeStation to find these in real time. If you're watching my active live service, you can see an alert on your screen for a stock like this. So AKTX, it was a very low capital required stock. Because the stock was very volatile, to take $100 of risk only required 475 shares, which at the price it was, I think around 228. That was only $1,083 in capital. Let's call it 1,100 with commissions and that sort of thing. And really can't use margin on that stock because it was so low price. But ultimately, at the end of the day, it finished with a risk reward of 17. That was a $1,700 profit, 157% return on a 1-day hold. So not a lot of capital required, a nice profit, a great percentage return on a stock that we identify using that action candle process, which really alerts us to the stocks that are getting capital coming in. And you can see at the bottom of this chart how much stronger the volume was on the 13th relative to the previous days. So the market essentially got excited about this company, and as the money came in, it's a relatively low float stock, it was able to make a pretty dramatic move. Well, that has been the Stock Scores Market Minutes for March 18th, 2019. I hope that you have a great week in the market. Hit that subscribe button, hit the like button, and most importantly, trade well.